All right, guys, our next guest says that only one cut is in the cards for this year, and he's bullish on three sectors from here on out. Two happen to be pretty interest rate sensitive, and one more is characterized as more defensive. Let's bring in Michael Yoshikami, the founder and CEO of Destination Wealth Management. Michael, thank you very much for being here. Let's take us through the conversation that we just had on the economic side of things and frame what that means for the market and what that means for investors. Where can people feel good about putting their money over the next several months?
Well, first of all, Dom, I think what Steve said was very, very important, which is he made the point that it's a matter of people getting comfortable with where rates are now rather than expecting rates to significantly drop. There was a sentiment that if rates didn't drop, the market would blow up. That hasn't happened as we have a more gradual pace upward. So I think, a more gradual pace downward. So I think that we're in a situation right now where we have to let the market kind of settle in with the new normal, which is rates not coming down as people think. And if people can embrace that, and I think they're starting to, I think the markets are going to be fine. I think it's going to be, people will get adjusted to it.
They'll get adjusted to it, but it also means that there's going to be outperformance in a certain place over others. You mentioned some of the places that we do think are going to be better positioned for investors given the rate outlook. Where do you think those sectors are?
Well, I think, first of all, the obvious sector, which has sort of been selling off as of late, is the whole AI tech space. I think Apple's announcement, or at least Tim Cook's sneak preview on what he'll be talking about next week, was about AI and some of the initiatives they have in place. I think financial services, if the economy does not go into a recession and interest rates are high, then you're going to have net margin rates that are going to be higher for financial services companies, and that's going to be a positive for financials. And then pharma, which has been really, frankly, horrible over the last couple of years. I think in the end, the high dividend rates are going to outlast the high rates for treasuries. So as treasuries start to decrease in terms of yield, dividend rates on pharmaceuticals get to be more appealing, and hopefully eventually the various vaccine technologies start to kick in, which we expect to happen sometime in the next year or so.
I mean, people haven't really been talking about vaccines when it comes to healthcare at all these days, because there's only been three letters and one number that have mattered to most healthcare investors, and that's GLP and then 1. So anti-obesity is like the AI of healthcare. Is the healthcare story going to broaden out beyond just weight loss and obesity?
One would think so, and we believe it will. I think if you look at the new technology that led to the COVID vaccine, we were talking to a senior person at Johnson & Johnson who at the beginning of COVID told us it would take 10 years to come up with a vaccine like polio. Turns out it took a year and a half or a year. So I think that acceleration, I think you're going to see that in many, many areas, including cancer treatment. You could very well see that in some of the Alzheimer's treatments and some of the initiatives that are underway there. And again, we should not underestimate this weight loss. What's the word I'm looking for?
Trend.
Trend is that's the word. It's not strong enough. This fanaticism that people have towards weight loss. Everyone, it seems, thinks they're overweight, even people that aren't overweight. So I think you're going to continue to see huge demand. If you do local checks, you see that the weight loss drugs are still sold out for months. Who knows when they're actually going to be in stock. So I think there is some tailwinds that are setting up for pharma. But if you've been in pharma the last year or two, it's been awful. I think this is a good price right now, certainly, given how far it's fallen.
All right. Michael Yoshikami of Destination Wealth Management with the trades out there. Thank you very much. Have a nice weekend, sir.